Last week, the Biden administration submitted their fiscal year 2025 budget proposal to both houses of Congress, and the budget reveals the White House's priorities for the following fiscal year and agency requests. The U.S. Department of Housing and Urban Development, or HUD, listed a few priorities for the Federal Housing Administration's home equity conversion mortgage program, and I figured that would be of high interest to you. Remember, these are proposals, not upcoming changes. Now, Housing Wire's Chris Clow summarized this in a recent column, and the first is HECM counseling. HUD explained that there are presently 367 HECM counselors on their roster that are approved for HECM counseling, and HUD is requesting a $2.5 million increase to fund a training grant, which would in part enable specialized training that would prepare counselors to support expanded HECM counseling and this is most notable, to better understand property valuation bias so they can effectively counsel the clients on that particular topic. This according to the HUD 2025 Congressional justifications for the budget. Now, while not being specified, this likely means that counselors would be alerting potential HECM borrowers of the signs of appraisal bias based on race or ethnicity of the homeowner. And this would align with the efforts of HUD's PAVE task force, or the Interagency Task Force on Property Appraisal and Valuation Equity. And that's been a real initiative from early on in the Biden administration. And then legislatively, HUD noted three key proposals. And the first would be to require HECM counseling on HECM to HECM refinances, regardless of how recently they have obtained their first HECM loan. I think that would be informative for those getting a refi. And HUD is also seeking to remove the borrower's ability to waive the counseling requirement for a HECM refi if the loan was obtained in the last 5 years. Also, the department said that this would give HUD the ability to require the borrower to obtain counseling, to ensure that the borrowers are fully understanding the financial transaction that they're entering into by refinancing their HECM. Well, there are very few HECM to HECM refinances today, thanks to interest rates. The second proposal, which has been presented repeatedly in years past, is to remove the cap or the limit on the number of HECM loans that can be endorsed or insured in a fiscal year. The third proposal would have Congress give a conforming change to HUD's authority to collect lower upfront mortgage insurance premiums for a refinanced HECM loan. Now, there's no mention of reducing upfront premiums for a first-time HECM, and I know that's been something on our industry's wish list for many years, but we'll keep track of that development. The next proposal would have a direct impact on loan servicing. HUD is seeking to change the mandated notices of foreclosure to include outreach methods that go beyond just the traditional mailing, and that's how it stands today. And of course, these servicers are trying to call as well. It says, the requested change would modify the existing notice requirements by adding alternative options when all HECM mortgagors are deceased, said the budget justifications. And lastly, and perhaps most interesting, is HUD's proposal to enact regional loan limits when they see fit. Again, this is just a request. And making a return to the legislative proposal to the HECM program this year is the concept of the regional loan limit, which we've seen before, but this time it's slightly different in its methodology. Instead of instituting and requiring regional loan limits nationally, instead HUD would implement those regional loan limits based on their judgment and discretion in specific areas. So if you'd like more details on this, and it's quite detailed, be sure to watch today's episode of the Industry Leader Update on HECMWorld.com. Detectives probing the death of a 96-year-old California woman nearly 2 years ago have recently uncovered that she was the victim of an elaborate murder-for-hire and reverse mortgage scam, which sought for the perpetrators to gain control of her home, said authorities last Thursday. And they've also announced that 4 individuals have been arrested in the case. Violet Evelyn Alberts was found deceased in her bed by her caretaker in her Montecito home on May 27, 2022, with a window in her home being shattered. The autopsy later found that she died from asphyxiation, and the manner of her death was determined to be a homicide, that according to Santa Barbara County Sheriff Bill Brown. Now, the case had been shrouded in mystery for several months as the investigators began to piece together what they called, quote, a tangled, evil web of financial exploitation against the victim, said Brown in a news conference last week. The scheme allegedly began when the widow, who was in a financially distressful situation, was approached by Pauline Macareno, 48, who offered to sell a reverse mortgage on her valuable home, said Brown. The victim was in a financially distressful situation where she had essentially aged out of her savings and she basically had a very valuable home that she lived in, but she had run out of money, said Brown. But Macareno ended up making a series of transactions, fraudulent ones, forging documents, establishing false identities, and seeking to ultimately and illegally gain control over Albert's property, according to the sheriff's office. Now, Macareno was the central figure, say the sheriff's department, in the manipulation and deceitful targeting of Albert's. Investigators did find evidence that Albert's became the target of a murder-for-hire scheme, said the sheriff's department. In the eyes of Pauline Macareno, Miss Albert's was living too long, said Brown, adding that the acceleration of her death is presumably what was behind the murder. Just 3 days before she was found dead, two men, 41-year-old Ricardo Martin Del Campo and 33-year-old Henry Rustaman, had gone on a scouting trip to Case Albert's home, according to the sheriff's department. That pivotal discovery shed light on the premeditated nature of the crime, and it underscores the perpetrator's calculated efforts to survey Albert's home prior to her murder and plan their vicious and reprehensible actions, said Brown. Now, both of those, Rastaman and Del Campo, were arrested last month, actually this month on March 5th, and they're being currently held at the Santa Barbara County Jail without bail on charges of murder and also conspiracy to murder Albert's, according to the sheriff's office. And a third man, a 58-year-old man, Harry Besajan, was arrested in January for his alleged involvement in the conspiracy while already being held in federal custody in Los Angeles on other unrelated charges, that according to the sheriff's news release. However, Macareno was arrested in 2022 and has since been sentenced to 6 years in state prison for fraud related to Albert's case, according to the sheriff's department. Now, she is now facing additional pending charges. I would imagine they would be for the murder, without elaborating on those charges, but that seems to be the conclusion. Now, Albert's was a cherished figure in the Montecito community, said Brown, and she was described by community members as active and known for her warm demeanor and social nature. And in our final segment for the week, the presiding judge in the bankruptcy case, which involved Reverse Mortgage Investment Trust, or RMIT, the parent company of the former leading reverse mortgage lender, Reverse Mortgage Funding, has approved a request to transfer the parent company's bankruptcy status from Chapter 11 to Chapter 7, and that's a big development. Now, that is according to the court documents that were reviewed by Reverse Mortgage Daily and Housing Wire. Now, the move allows the RMIT estate to sell off their remaining assets to satisfy creditor claims. It can also provide additional mechanism for resolving disputes while reducing the administrative costs that the estate would need to continue paying under a Chapter 11 bankruptcy plan. In the original request, the RMIT plan administrator explained that a conversion to Chapter 7 was being sought to preserve the value of the estate's remaining assets and ease the overall liquidation process. The plan administrator hopes that by converting this case, instead of seeking dismissal or simply resigning, that the estate will be able to preserve the value of any potential recovery from the Texas Capital Bank dispute or other litigation for the benefit of all unsecured creditors, said the January filing. Presiding Judge Mary Walrath of the U.S. Bankruptcy Court for the District of Delaware found that the request for conversion from Chapter 11 to 7 was due and sufficient under the circumstances. Now, the conversion will be effective anywhere from 5 to 10 business days after the entry of the March 12th order, according to the court filing. And when presenting the motion to convert the case to Chapter 7, an attorney for the plan administrator reiterated that this was partly due to a dispute currently playing out between Ginnie Mae and TCB, or Texas Capital Bank, who is a debtor in possession lender to reverse mortgage funding. After the bank filed the lawsuit, the court in that case set deadlines well into 2025, and that made the situation more challenging for the plan administrator in the bankruptcy case to resolve it in a timely manner. The attorney for the RMIT estate told Walrath that the case is clearly not going to be resolved anytime soon. As a result, the court previously entered an order turning over the unencumbered assets to Texas Capital Bank. The plan administrator has worked diligently to try to resolve as much of the remaining issues as possible before they needed to come to the court to request a conversion from Chapter 11 to Chapter 7. Now, while it's unclear at this juncture how the Texas Capital Bank dispute will conclude, there remains the possibility of future distributions being available to creditors. If the Chapter 11 case was to be dismissed, all creditors, including Texas Capital Bank, could lose the opportunity to receive or recuperate any funds from the estate, said the filing. And the creditors themselves would also be in a better position if the Chapter 11 case converted to Chapter 7, which would remain and be preserved as a vessel that can resolve any remaining disputed unsecured claims and distribute funds to all creditors if TCB was successful in their dispute and thereafter returns funds to the estate, according to the filing. So that's the latest update and kind of the unwinding of the parent company of a former reverse mortgage lender, Reverse Mortgage Funding. If we hear anything else, we'll be sure to keep you apprised. And that concludes another episode of HECMWorld Weekly. Thank you so much for joining us. Don't forget we have an audio companion. If you can't watch and you just want to listen while you're in the car or working out, you can do that on Apple Music, Spotify, Podbean, or of course here at HECMWorld.com. Thanks again for joining us, and be sure to return next week for more reverse mortgage news on the go.